So we have an interesting topic. I was in Singapore last week for the FinTech Festival, and tokenization was everywhere. Everybody was talking about it. And so maybe what I think we should start with is to try to define what is tokenization. As you provide your own introduction, if you can define what tokenization is it a solution looking for a problem? Frank.
My name is Frank. I am on the sales team at BitGo. BitGo is a regulated custodian as well as a software company providing a wallet platform to enable enterprises to interact with digital assets. We sit in an interesting part of the ecosystem in that we don't necessarily build applications. We enable others to build applications. So just as background, something like 20% of all on-chain Bitcoin transactions pass through our infrastructure. 1 out of 3 exchanges uses BitGo underneath the hood. A number of the council members here are our clients, and we custody the HBAR for them. So we are both a regulated financial institution that enables regulated participants to interact with digital assets, as well as, again, a software provider. So in the context of tokenization, to your point, Eric, not a day goes by where we don't have a conversation about tokenizing something. I will go out on a limb and say we are early in the tokenization game. There are a number of things that need to be built, from infrastructure to regulation, that will enable the mass adoption of tokenization. But to take a step back, well, what is it? I think the previous panel actually did a really good job of describing tokenization. Another way to describe it is simply the digital representation, the online on-chain representation of a thing. It can be anything. It can be a piece of data. It could be a financial asset. It could be a dollar, as in the case of stable coins. It could be a right to something. It could be anything that can be represented on chain. And most of what we're seeing now is the tokenization of things that have financial value, equities, ownership interests, methods or means of transferring value. We're seeing all of these things, and we're seeing some pretty creative applications of tokenization. So I'll stop there for now.
Yeah, thank you. Ed, I think you have a very unique perspective from RedSwan. Yeah.
My name's Ed Nwokedi. I'm the CEO of RedSwan CRE, and we are a tokenization platform that focuses on institutional commercial real estate. And that's a great explanation of what tokenization is in terms of representing real world assets. We choose to focus on real estate. We tokenize both the debt side as well as the equity side of real estate. And what that means is fractionalizing the equity into shares so that they can now be issued and traded in lump sum or also in fractional shares on both sides of the equation. We started in 2018 when tokenization really wasn't well known, to say the least. And we learned a lot, but since then we've been able to tokenize over $5 billion of assets and have another $3.5 billion worth of assets sitting in the pipeline. And so I think that's important because it's not a solution or a problem to a solution. It's actually a solution to a problem. You think about, the traditional ways of how people buy and sell real estate. It's really for the rich and famous, the well-to-do, because I go back and say that I started my career in real estate with Cushman & Wakefield for 17 years. I was the head of the capital markets division for Texas, and worked with a lot of institutions, a lot of buyers, a lot of sellers. And so that was the industry I was in, and those are the people I worked with, but never to the average person, right? I'm always making speed dials on 25 people and say, hey, I have this big apartment complex for sale, and they buy it. But never talking to the regular people who can really get involved in the high quality assets. Because, there's different levels of assets that you can buy as an investment. There's a mom and pop shops on the corner. There's duplexes. And then there's also institutional properties like this hotel that we're sitting in. And that's what I sold when I was at Cushman & Wakefield, hotels and multifamily properties. And I think it's important, and that's why I got into this business, to really be able to break down real estate so the average person can actually be able to invest in something of quality something they can trust, and be on the same level as Bill Gates who's investing on real estate. You can just follow what he does because now you have that access. So that's what we do with real estate tokenization. And hopefully I answered that question.
Yeah, thank you. And Rob, you have yet a different perspective, because when you and I started working together, you made me discover the tax implication of everything around digital assets and blockchain.
That's right.
But it's fascinating. I tell you, I didn't like tax before. After I talked to Rob for a few weeks, I just love this topic because it's so relevant in the world of tokenization. Yeah,
it's still relevant today, right? So Rob Massey, I am a tax partner at Deloitte. 13 years ago this month, I had a conversation with someone who ended up being the first client in Deloitte in blockchain, which was a very interesting discussion with our board, given the news articles at the time. And here we are. So we serve throughout the ecosystem. I lead our tax function for all things blockchain digital assets. I have partners who look after audit and consulting and advisory work, but I spend 100% of my time in this space working on various segments of the ecosystem, which is fascinating given the client portfolio that we keep around the world. And tokenization is a big topic. It means different things to different people, but important for me and my partners to ask that question, what's the thing? And you referenced it, right, Frank? It's a thing. It's a digital representation of something. But what's interesting is when you come to tokenize a thing, inherently you're bringing something new to the equation. And if you're just enabling it on DLT, that's one thing. But if you're bringing something new, if you're bringing new rights to a holder, if you're bringing access, Lehman mentioned bringing data into the token and then granting access to that data, that's something new. And if the thing that's new that you've brought to the token is different than what you had before you tokenized it, you have to pause and say, with the tax lens, with the GAAP lens, with the regulatory lens, do you still have the same thing that you had before you tokenized it? And that's where I spend most of my time on this topic. And we even have T-shirts that are printed with "What's the thing?" because this has been a question we've asked now for over a decade, and it's highly relevant to tokenization.
Thank you. Yeah, interesting. Tom?
Good. Yeah, I was just thinking, I'm an economist, which is probably as exciting as being a tax partner.
Even better.
So I represent the LSE on the council, but also with Jeremy, we run the startup called Alexandria. So I have some merch on, and my son thought I'm finally cool. So point is, what we're trying to do is actually kind of digitalizing the media industry. Now, it's a really big industry. It's a couple of percentage points of GDP globally. That gives you a couple of $1 trillion. So it's really serious. You consume it every day. On the other hand, it's really hard to bring technology to people who actually don't like technology. They're all creative people, and they really get excited when they open an Excel spreadsheet and they think this is cool. This is really advanced. So, so you bridge actually a cultural gap, which is probably most of the time how we spend our time, Jeremy, just explaining people that we have a solution that really can help it. And that goes back to tokenization, because how this works is we first kind of automate the contract, and then on the back of it, you tokenize the assets, which is a film and everything underneath. And then we also have a solution for how we enforce these contracts, which is called DRUM. So we have kind of an end-to-end solution, which really works. And we have somebody in London who we can't disclose who it is, but probably who it is anyway, who actually starts to implement it. And some senior people really get it. The junior ones really block it, but I think we kind of now overcome this quite nicely. But you need time and you need patience. It's almost like teaching undergrads. It's like, it really takes time.
Thank you for that. So very diverse background and perspective, which is exciting to me. McKinsey, I think, predicted by 2030, the market for tokenization is going to be beyond $2 trillion. With 2030 is soon, right? We said we are still early in the market, but 2030 is coming up quickly. But I think I'm wondering still, why do we need tokenization, right? Back to my question about solution for a problem. Why do we need to tokenize? And I think, Ed, you started answering that question with giving access to people who typically don't have access to, so that they can be Bill Gates Jr. But maybe we can double click on that because I think that's really important.
Yeah, I said that earlier because that was really the reason why I jumped into tokenization when the government made it legal in 2018, is because I felt that the public didn't have access to high quality. But since then, we realized that tokenization has significant benefits to property owners because in the real estate business, property owners buy, they fix up, they sell, they keep flipping, and that means they're not really growing their AUM. They're just taking the money and moving on to the next one. Well, that becomes a problem as prices keep getting higher and higher and the profit margin gets thinner and thinner. But so now if you're able to tokenize those shares, they can actually sell some of their equity off, get some liquidity, wait for another time period when market may be stronger, sell more of their equity off. And pretty soon they can sell all their equity off of the property and continue to manage that asset on behalf of the shareholders. And they can use that equity to go buy new properties. And that does let them grow their AUM. So that's the liquidity aspect for them is very, very important. I think there are other aspects to tokenization as well. If some people don't want to actually sell their shares, they want to actually lend off of their shares. So when you tokenize that asset, they now have a new source to actually lend against the equity in their real estate. I think another major benefit that we're seeing positive for U.S. owners is access to international investors. The pie the pot, I should say, for capital from at least here in the U.S. is starting to fill up. And why I say that is because banks and financial institutions have invested over the past 10 years in real estate. And let's say the average loan to value is at 75% where they want to be. Well, now that interest rates have gone up 400 basis points and cap rates have gone up as well, a lot of banks are finding themselves at 100% LTV. And so therefore they can't loan any more money out for real estate, right? So they have to now start, selling off, wholesaling some of these properties, short selling. But that gives an opportunity for tokenization as well, is for them to kind of, bring down their balance. So there's a lot of reasons why I see tokenization as a solution to many current problems. And that's how we address those problems to these property owners is, hey, we see what you're going through right now. You can't sell your property because the market is not convenient right now with the price point for you to sell, but you need liquidity. Even to get a new loan today, you have to bring cash to the loan because, again, the value has changed, the LTV has changed. So they say, hey, I can give you another $20 million loan, but you got to bring in $3 million in cash. Well, they don't have it. So if they're selling out some of their equity, they can now raise that cash, get a loan, and keep going.
Yeah, I think that's really interesting because in many instances, we are struggling to create a sense of urgency for people to adopt a new technology. And what you just said is, the people who are going to adopt tokenization are going to accelerate their business faster than the one who don't. And that is a really big differentiator, right? So you mentioned access from a unit price. So now you can invest, $1,000 into a business as opposed to $1 million. Access from a geographical point of view. So you can access from outside of the country. What else? Why do we need tokenization?
I mean, the examples really are specific to industry, but it really is, the patterns that we see and the benefits are uniquely qualified. So the lessons learned in DeFi lending, let's just talk about that for a minute, right? You talk about collateralizing assets. The lessons learned are fascinating, right? What happens when you're under collateralized in DeFi? Your asset can be sold. You better be quick, right? Tons of lessons to be learned from that. So now think about how that creates efficiency in the markets, in collateralization. So tons in that. Go back a number of years. I think the first examples that we saw with tokenization were commodities, right? It was gold, it was diamonds, it was palladium. And by the way, that you tokenized gold could be two different things. It could be this token represents that troy ounce sitting in that vault in that canton in Switzerland. Or it could be this token is a right to redeem for a troy ounce of gold in one of these 4 redemption centers around the world. Two different things, by the way, right? And so you really have to be thoughtful around the construction. The other is let's think about, we were talking about AI in the last panel, tokenizing IP and rights to that IP, like real IP that you've developed. It's not a deep fake, it's mine. And there's these 14 different parties around the world have rights to the usage of that IP. Let's lock it down so that it can be accessed with programmable funds with real-time remuneration to the right parties around the world. It's fascinating, really spanning pretty much, every industry we're looking at now and the impact. So rather than a solution to the problem, it's more of a consideration because this is where the world is going. And the more that we have a friendly regulatory environment soon come, then the more that we can actually get some mileage out of this.
Yeah. Hey, Frank, maybe with you on, because to me, stablecoin is kind of the killer app of tokenization, right? It's working today. There's a lot of liquidity. Why did we do stablecoin, and why are we going to do even more of that in the future?
So to repeat your question in a slightly different way, why did we tokenize the dollar? What benefit did tokenizing the dollar bring to the universe? And to echo some of what has been said on stage is, did it bring better accessibility, efficiency, liquidity? What did it bring to the table that made the world better? And the simple question is, it's done a number of these things, right? It may not be so easy to transfer $1 or $1 million or $10 million from country A to country B. You have Fedwire, you have SWIFT, you have a lot of intermediaries, you have time and cost. Well, stablecoins, a tokenized dollar, can effectuate that transfer of value much faster with much less cost, then you've brought something new to the table. And so I think that's been the easiest way to describe why I think stablecoins have been so popular. It's a more efficient way of transferring value, particularly cross-border, but also in the context of use cases that require instant settlement, right? You have a delivery versus payment. You need that settlement to happen as fast as possible to reduce counterparty risk. So stablecoins, I think, obviously are here to stay, and we certainly believe in the future of stablecoins, not only as a transfer of value, but also to effectuate faster settlement for any kind of transaction, not just a financial payment.
Tom, anything on the why? Why do we need tokenization?
Well, I just want to pick up, what Ed said about, you create in a way liquidity, and the liquidity creates much better prices for the lending and so on. So, by actually creating this liquidity, you generate profits. So what we do is we generate transparency, because suddenly everybody knows where are the assets, under which conditions, who owns it for how long. And believe me, nobody actually has any idea where the stuff is. They run around literally with endless Excel spreadsheets and have an army of lawyers trying to enforce it. And this goes away overnight. So again, we generate real value out of thin air, essentially. And that real value is actually something that drives adaptation.
Yeah, I think it's interesting because when you work on new technologies and innovation, you always think about whether it's a cost play. Am I going to be more efficient, save money, or is it a revenue play? I'm going to generate new opportunities. Yeah. And tokenization is both, right? You can actually do both with tokenization. To add example on scaling your business faster, which means more revenue, but you can also be more transparent or give access 24/7 to a token, which is not the case today. And obviously, by doing that, you're more efficient.
One thought is, by tokenizing something, in case of real estate, you've made it more accessible, right? Accessibility of this asset to a wider audience, international, smaller investors. When you bring accessibility, you bring liquidity, right? And there are a lot of assets right now that people own that aren't necessarily liquid because the infrastructure does not exist for you to facilitate that liquidity. And so you may not be able to sell this thing that's worth a lot of money. But with liquidity and accessibility also comes price discovery, right? There are assets that sit on balance sheets that may be marked to market once a quarter, once a year, once a long time, where there's a disconnect to what this thing is worth on paper versus what it's actually worth in the real world. So when you tokenize something, you can help facilitate that. Private securities being a use case we see a lot, where Jobs Act and all these Reg D, Reg S issuances, right now, a lot of these are just book entry, but when they become tokenized and you facilitate the easy transfer of ownership of private securities, you get better price discovery. Now, some will claim that the lack of price discovery is a feature, not a bug, but there are use cases where you may actually want better price discovery of ownership of a private security.
Yeah. And I was about to go to you because I think we can use a very tangible example in real estate because people understand what real estate is. You can touch it. And the question I'm sure you have all the time is, I can invest in real estate today, $100 if I want to buy a REIT, right? I am exposed to this market today. What's different with tokenization? I know you have that question all the time, but I think that's important.
All the time.
Because it makes it very tangible for us here.
Well, I think one thing that blockchain does for tokenization, it's the decentralization of the asset and giving people their own opportunity to hold and control their assets. And as a trust factor, let's look at, Starwood, for example, which is a REIT. And, you believe that you give them the money, they'll invest their assets in different assets and you're going to get a return. You're really just throwing your money into a brand. You don't really know what's going on. You don't know what's behind the scene. There's no transparency on that transaction. And when it turns out that they can't actually give you your redemption because they don't have the cash, you're shocked, right? But you shouldn't be because, you don't really know what's going on. I think what tokenization allows individuals to be able to create their own REITs, right? To be able to buy into the assets that they like, they understand. And I think fractionalization allows them to do that in increments that meets their affordability. But also, I think that it opens up another opportunity for individuals and institutions in order to trade on their balance, right? You own real estate. It's paying you a return of 10% on the annual basis. And you just sit there and it's paying you 10%. But now it's like a stock. When you see that asset has gone up, you can sell it for a higher price. When you see that asset has gone down, you can buy it back. You can actually increase your returns, if you're really good, 3 or 4-fold in 1 year because you're paying close attention to the assets that you invested in. As opposed to REIT, you just throw it in there and you close your eyes, you do your business, and you hope that they do their job. And when they don't do their job, you're a little shocked, like I said. But this gives you more autonomy to run your own type of personal REIT, which I think is important and never has been available for people before.
Yeah, and you can trade 24/7, and you can buy that from outside of the country, and so on and so on. Yeah. Awesome. What have you seen? Because tokenization has been around for a few years now. Have you seen terrible stories like failure around tokenization, and why? And why did they fail?
Well, I just think that in general, there's just this lack of knowledge surrounding tokenization. For the longest time, everyone associated tokenization with cryptocurrency. And so if you go to an institution, and that's one of the reasons why I like Hedera, because, with this foundation, the governing council you have, it lets you know that there's institutions that are behind this movement of the blockchain. But people assume that, hey, you're selling Bitcoin. Matter of fact, I want to tokenize your asset. I don't want any Bitcoin, right? They try to dismiss me right away. Before you can even tell them the solutions, they say, wow, that's interesting, but they don't believe it because they're hearing the government say there's a lot of regulatory problems associated with Bitcoin or with blockchain. And they're, again, speaking about cryptocurrency. And, we had to get our license with the SEC, which was, almost 2 years going through that process. And I realized the disdain that the SEC has for cryptocurrency was they would not let us talk about it. They would not let us accept it. You couldn't put it in your ecosystem. Otherwise, they wouldn't give you a license. So we kind of had to go, start from scratch. But I think there's just a misconception about how tokenization functions and whether or not the regulatory is in place. But the regulatory has been in place since 2018. They follow the same SEC guidelines that have been installed since 1934. And so there's no problem with regulatory on tokenization. As long as you're licensed and you're selling digital securities and you realize you are selling a security, there's no problem with regulatory at all. It's when you're just trying to skirt the situation and you don't have a license and you're trying to tell people you're selling something that's it's not a security, it's a commodity, that creates problems for everyone. And I think that now the industry is starting to understand the difference between the two, and they're leaning in towards tokenization as a solution, as opposed to being kind of mystified by it.
A scary thing, yeah. Tom?
No, I think and Ed makes a very good point. I think our biggest problem is communication. What do I mean by it? The public does not understand what we are saying. For them, it's all Chinese. It's a bit like, being in a seminar in academia, nobody would understand a word other than the few people who sit there.
Mm-hmm.
And we are masters of talking to each other, but we can't explain in very simple language what we do and how we do it. And I see this all the time in the media industry, because if you start telling them about tokenization, they shut down, the party's over.
Yeah.
You have to say, what does this actually mean? and tokenization comes like half an hour into the talk. And I think this is something we really need to think about. How can we talk to the public?
Yeah.
The
Rob.
common problem patterns we see in tokenization, this is maybe upstream from your licensure comment, and that is in the design of the tokenization, how are you going to do it? Comparing how it's described in legalese, compare that to what's actually happening with the technology. And I think too many times we get caught up in our own head, our own vernacular about what these things mean, but you have to test it. You have to actually put everybody in the same Zoom or in the same room to make sure that the attorneys can hear, the business people can hear, the technologists, the accountants, the consultants say, what is really happening technologically with this thing that you've designed? And then how does that translate to the words that are you need to make sure land properly, whether it's in an offering document or in a registration or a license or something on a tax return or, some VAT decision that you're going to make out there, right? All that stuff really matters, but there's breakage or a gap between how the legalese compares to actually what's happening in the technology. And so you got to have everybody actually get into the tech just a little bit, even for those of us who are not technologists.
Mm-hmm. Mm-hmm.
That's very true, because you actually have to explain to the property owners the process that they're going to go through, the legal process of, first of all, vetting the property, because, before you can tokenize, you have to make sure that they actually own the property, right? And who owns the property. But there's due diligence, a lot of things that they're not familiar with. Some people thought that because we're in the blockchain space, that we're just going to launch some coins out there and the crazy investors are going to just buy it because it's a coin. But no, that's not the process at all. And so when you start walking them through the process and they understand it, they're surprised at how structured it really is. And I think that makes them feel a lot much more comfortable to move forward, because there is structure, there is compliance behind it.
Mm-hmm. Mm-hmm.
To Tom's point, I think you'll see mass adoption of tokenization when the word tokens is out of the picture.
Yeah.
When the pitch is, how would you like to own 1/100th of a Van Gogh? How would you like to own 1/10 of this multifamily property? The answer is yes. They don't need to know it's tokenized. How would you like to send or pay your supplier in another country in 5 minutes and 5 basis points? The answer is yes. They don't know that it was done over stablecoin or there was a tokenization. The conversation needs to get to that level before we see mass adoption.
Yeah. And actually in Singapore last week, FinTech Festival, right? That was the main discussion. The main discussion with, let's stop talking about the technology and the stack. Let's talk about the value to a bank, to a regulator, to a central bank, right? We talked about CBDCs as well. So talking about actually where tokenization is going to grow faster than elsewhere. I know the US environment is going to change probably quickly, maybe, hopefully quickly. But where do you see traction today, and why do you see traction in those areas? Maybe more for you, Rob, because I know you do global stuff. And maybe Ed, because I know you have a lot of projects outside of the US.
It's helpful to see, just the general tone of the environment, but also the regulatory clarity that's been offered. And it comes up in odd places. I mentioned VAT and threw it out there. Indirect tax is a really big thing, actually, particularly when you think about what have you created? Is the underlying asset still the thing that's being taxed, or have you done something different? There's plenty of countries out there that have said, actually, you get to a different place.
Yeah.
Indirect tax, when you move, further away from something which is money or financial instrument, it actually may be subject to VAT. And that blows up all the traditional models that we've grown up with financial services when you started subjecting things to VAT. So the clarity that's been offered around the world, I know the tone is interesting. There's actually been a fair amount of clarity in the US and at the state level, in small doses. And it's a place that you actually can, frequently go and be proactive and get a ruling on things. Switzerland has provided a lot of clarity on this front for a period of time. Singapore, right, for obvious reasons. So I think those are where we see a lot of the innovation happening.
Yeah.
It doesn't happen. That's purely with the tax lens that we see people getting some comfort, but there's the securities law piece as well.
Yeah.
Historically, where have we seen a lot of the innovation happening? The people are launching from islands around the world. And that's really hard, because in any of this stuff, you need substance. And without, humans, real management, operating business models, it's going to be really hard to get something done from an island. So there's that tension point. And the last overlay there is the new rules by the OECD that have been posed on information reporting, very expansive. So even some of our popular island countries that people like to form foundations and launch from, they're even considered with the new OECD guidelines of info reporting. So the regulatory environment is everywhere. So now you just have to build that with that in mind.
Yeah. Tom, Ed, yeah.
Well, so I had a debate in my own head about regulation, because regulation actually has its benefit if the public actually starts to believe in your good. And, you only have massive adoption of the technology once you push it into the big countries around the world.
Right.
We have 8 billion people and, half of them are probably potential consumers of this. So how do we entice them to use the technology without saying it's technology? Because we solve a problem. And so kind of regulation is a bit of a double-edged sword here. And I think we need to be just very clear how we define what we want to regulate.
Yeah.
Yeah, I find that first of all, there's a lot of demand that we're receiving from places around the world to tokenize assets. And what motivates us is, does that market have any regulations in place, right? And so we've done road tours in different geographic areas around the world. And we find that where there's regulatory in place, like Singapore or Japan or Europe, in some places in Europe, there seems to be more activity, more demand for. They know exactly what they want. United States is one of the hardest places to sell because they've been misled or just misunderstood about tokenization in general. But you go to other areas around, in the Far East or the Middle East, and they're hungry for someone who can actually get this done for them. They know what it means. They know the benefits of it, and they want to implement it right away. We like I said, we had a client call us last year to come over to UAE because they had a big portfolio of properties, and he told his whole team, because they were all naysayers, said, "Oh, you don't want to do this, boss." He said, "Look, we're on the board. This is all of our leaders here. These guys are going to tokenize our assets, and this is the direction we're moving in." And everybody had to jump on board. He was serious about it. And they wound up giving us like $3.5 billion of assets to tokenize. And you go to Africa, you see the same thing. You see the SEC in Nigeria is very much in favor of help us set up frameworks because we see this as a way for us to launch and get leverage with this technology. And also to pull our users, our citizens away from just burning their money on cryptocurrency. Because, they're buying cryptos, gambling with it, and they're finding that they're actually losing value of their currency because people are just throwing it out to the international, blockchain community, and it disappears when they get a rug pull. So they want to encourage their citizens to start buying hard assets so they're actually building value. And so these are the areas where we want to go and do business because, they're leaning in, they're asking questions. They're not like, so tell me, what does blockchain mean? Tell me what the token started from ABC. Talk like I'm just a 2-year-old and explain this. Yeah. I get that all the time.
Yeah.
And I get tired of explaining that. So I want to go where people actually know why they want me there and what they want to get done. And it's easier to put a deal together because both of us are now excited about what can be done in that market.
Yeah. So I have a few more questions, but I think we're going to have time for a question or two from the audience. So if you have some, get ready. I'm going to quote on you in a few minutes. The next question, I think, for me is trying also to make it very tangible. I want to be 5 years from today, and I want to open my brokerage app on my phone, and I have, securities and bonds and private equity, tokens, private debt, maybe real estate, all of those things. Who is going to own that? Which company do you think is going to own that experience? That's going to be interesting, right? I mean, I don't need a name, but how do we figure this out? How do we find out who's going to win that market?
I'm going to answer this just with a question. Are you sure it has to be owned by one person? Or do we think...
the experience has to be in one app, I think, right? To make it very...
But the accessibility...
But maybe not,
but
right.
An app may only be an accessibility. I mean, all of our heads, we've all grown up in a world which is, controlled by, TradFi primarily, right? And we're starting to experience CeFi and we're experimenting with DeFi. But the conversations that I like the most are the largest banks in the world paying a lot of attention to DeFi.
Yeah.
Right? And so like the experience that you're describing assumes there's one party that owns it. Maybe that's just an access point. Whereas there's a shared infrastructure that people believe in with some controls and maybe somebody in the background like Hedera, right?
Yeah.
That we can all believe in trust. So I'm not going to tell you the party, but I mean, I think that's where you have to sort of test in your head where things go. And then how do you layer on the compliance programs that will allow each of our countries to get comfortable that that's a safe way to do business? I think that's probably the hardest thing.
Mm-hmm.
We're seeing a lot of fintechs now that already have apps that are probably on your phone where you can pull up the app and you can look at how much crypto you own, you can look at how much Apple stock you own, and all of these apps, or many of these apps we're talking to, they now want to add additional assets, tokenized assets. They want to merge all of this into one single pane of glass.
Right.
I can't predict who's going to win, but there are efforts now for where you can pull up a single quote unquote super app and, all right, here's my interest in real estate. Here's my interest in an emerging market consumer loan, or here's my interest in a specific tranche of a basket of consumer loans that has been tokenized.
Yeah.
And I now own the B tranche or a part of that in one single pane of glass. And you see ATSs now doing this. We're going to merge equities, crypto, other assets. Be interesting to see who wins, but I don't think it's going to be a winner takes all.
Okay. Ed, yeah?
I just think that eventually you're going to find corporations rather coming to decision of lease versus buy, and they're probably going to incorporate companies that will provide some kind of a powered by version of whether it be tokenizing real estate or tokenizing money market funds or tokenizing gold, and they might just roll it in like a big like Goldman Sachs, although they're doing the opposite right now.
Yeah.
But they might roll it in and say we want to touch all these different digital aspects so that we can give our customers access to this. But it may not just be one company they're working with. It may be several companies that provide the service.
Yeah. Thank you. Any questions? Yeah, thank you. Wow, a lot of questions. Let's go.
So we've been hearing about real world assets as hype for about 5 years. And last year was the big hype. It all came out again. This concept of a computational economy. What are the big blockers right now, particularly in light of the fact that we're having a huge regulatory change happening in the US, and so all things are open? How will that drive things away from RWA, or are there other blockers that you see?
Yeah, the question, I don't know if everybody heard the question, is what are the blockers for RWA tokenization to be adopted at scale, I guess is the question. Anyone?
I can start. One is simply technology, standards, and infrastructure. There's many different ways to tokenize an asset or a security. You have ERC 1400, 1404, you have 3643, you have all these different ways to tokenize a standard, and these things can live on multiple chains. And how do you munge all that together? And then you run into the problem of, okay, how do we trade these things?